Welcome back, and joining me with his take on what's playing itself out on the market scene is Nick Kunze from Sanlam Private Wealth. Thank you so much for your time, Nick. October was a very interesting month. It started off great, but ended off on a sour note. Is this the volatility that we're going into November with?
Oh, gee, hello there, and all the viewers as well. Is it? Yeah, possibly. October's always that torrid month. Everyone talks about crashes and the like, and as you said, no window dressing whatsoever the last few days. It was a very torrid finish to a tough month. I think it's probably going to get a little bit worse. This volatility is definitely coming back. We've got the elections next Tuesday in the US. That's going to have some fun and games. We are nearing the end of the earnings season as well. A few months left before year end. So yes, investors be prepared for a little bit more of the same, I think.
We'll talk about earnings season, Nick, because even that has been fascinating to see the mixed reactions and sentiment on the different earnings. We had investors optimistic about Alphabet, and then we had a sourness coming through after Microsoft and Meta produced their results. But then today we're high on Amazon and Intel. Just talk to me about what stood out for you in this kind of mixed reaction from investors from these great stocks.
Yeah. So, I think if we can cast our mind back just a couple of weeks to the start of the earnings season, and traditionally it always kicks off with the US banks, and they were pretty good. Morgan Stanley, JP Morgan, Wells Fargo, even Bank of America, all came out quite well. Share price reaction was good. I think at one point Morgan Stanley 7-8% move on the day, which is a really solid set of numbers and a solid price movement. So that normally sets the tone. But to your points, Nati, as the sort of I guess the earnings season's progressed, it's been a little bit more mixed. The Magnificent Seven kicked off this week, and that has been mixed. Apple was a little bit light on the Chinese numbers. Amazon was okay, I thought, and looking pretty good. Intel, as you mentioned, I think up 6% as we speak, when this is obviously pre-recorded, but pre-market up 6% on Friday, coming off a low base. Obviously, it's not like the biggies. So it is a little bit mixed, and I think investors trying to grapple with this AI spending, big sort of moves in the back of any single comment regarding capex. I think Meta spending $40 billion US so far this year on everything to do with AI. And I think investors at some point are going to say, look, where are we going to get the money? Are we starting to monetize this? Or where are we getting this sort of income back? And I think that's making shareholders a little bit nervous as this earnings season progresses.
With those US jobs numbers, this is pre-recorded, Nick, as you mentioned. So we're only going to be digesting those on Monday.
Yeah.
But just looking at the expectations, it seems that there's a slowness that is expected there. And I'm wondering if it does, in fact, get to that, where the growth does surprise to the downside. What could the markets be thinking in terms of what the Fed could do?
So there's a little bit of once-off, these jobless numbers this month, because there are going to be a lot of once-offs. So the hurricane effects, and of course the strike at Boeing. It's a massive employer that's going to make sort of effects. So it's going to be a little bit sort of a muggled report. We are looking for unemployment to stay the same at 4.1%. And we're looking for the sort of non-farm numbers to come in anywhere between 110, 115, which is a big pullback from the 200 odd we're used to. So it's a little bit, unfortunately, we can't look too much into it. But I think any sort of commentary that's going to come out, that at least they're looking at that, going forward, are we going to see a 25 basis point? Is it going to be 50? What are the sort of monetary policy MPC thinking at the moment?
Yeah.
Certainly, if you look at these bond yields, which has been quite worrying. Since they cut by that jumbo 50 basis point cut, which signaled the start of the cutting cycle, US yields are up almost 0.5%. It's quite extraordinary. So really is a bit of a confusing market. So we do need those yields to come down if we want this sort of rally to continue, or at least sort of come back a little bit and bounce into year end.
Well, talking about bounces, we did have a SASOL bouncing on our side. I guess I kind of predicted this in my head yesterday. It went to 98 Rand, and a lot of people had been asking if they should go into SASOL when it goes below 100 Rand. Of course, we have seen an uptick of about 6.5% today, standing at 103, 104. But I'm wondering at some point, because I was also talking to some analysts yesterday, and they were saying that maybe SASOL just been punished more than it deserves. At this point, is the SASOL share price just beholden on investor moods rather than the actual fundamentals or not?
Sure. I mean, we get a lot of questions from clients as well, and just for disclosure these days, is one of our holdings in our portfolios at Sanlam. So let's take a look at two different sides to it. First and foremost, is it cheap? A lot of investors are asking. Yes, it is cheap. It's very cheap. It's probably the cheapest it's been on a lot of fundamentals: price to earnings, price to books, you name it. And also coming off disappointing quarters. The share price has really battled to get going. Not just an oil play anymore as well, of course, to remember. 40-odd% of it is driven by sort of global chemical prices, and those chemical prices have been under pressure as well. So it doesn't just need the oil price to bounce back, it needs a couple of others too. Also, funny enough, it does require a much weaker rand. And the flip side is, us as South Africans have enjoyed a stronger rand, one of the best performing EM currencies since the GNU so far. So that hasn't played into SASOL shareholders. Overall, you've got to be a little bit careful, though, with SASOL, because I think another key factor we haven't mentioned yet is that the ownership structure. If you have to look at the share register of SASOL, there are very few foreign shareholders in it anymore, and that is because of the emission problems that it's got. It's one of the dirtiest emitters, or certainly the single point emitter at Kunze. And if you are an overseas shareholder or a big asset manager with a lot of ESG requirements on your mandate, you can't buy SASOL. So therefore, you are left with a lot of local shareholders who are probably holding the share and probably can't buy anymore. But value investors, if you like it, if you like a share that trades in lower single digits, then SASOL certainly at these levels does look attractive. Anyway, good to see it's got a bit of a bounce today for them.
Yeah, all right. Well, let's get into your stock pick quickly, Nick. What are you choosing today?
So just on the back of the discussion, AI, liking Amazon, came out last night. It's one of the better ones to surprise the upside. It's certainly earnings per share a lot better. A really solid, huge beat as well as margin expenses, over 40% margin on an AWS as well, coming in Amazon Web Services, which is with the cloud computing side. Also solid growth there, almost 20% up. It is expensive, just a caveat there, but so all the AI shares, but out of the whole bunch, it's certainly the cheaper of the bunch, and I think looking like the most upside. So Amazon is the stock pick for today.
All right. Well, thank you so much for your time and for your analysis today, Nick. Much appreciated. That was Nick Kunze from Sanlam Private Wealth.